How to find S&P 500 stocks that are posting earning this week. This is what we're doing today. We're going to use Market Chameleon filters to find all the companies in the S&P 500 that are due to report. This is a massive week, especially August 1st. There's so many companies posting, and also tomorrow there's Microsoft, there's AMD. So we're going to go over all this, we're going to find it, and we're going to see some alpha. So with that being said, let's get started. Of course, feel free to read the disclaimer and know that I'm not a financial advisor. This is not a financial advice. This is for educational purposes only and entertainment purposes only. With that being said, let's get started. Market Chameleon link below for 7 days free trial if you haven't already. And of course, you got all those trade ideas, but the focus of today's video is about earnings for the S&P 500. So feel free to check and see what you see and dig deeper. So what you're gonna do, you're gonna click on earnings, okay, right here, and this is even a free version. So you're gonna click calendar, okay. So while you experimenting with everything that Market Chameleon has to offer, they do have some not premium services, but some free services for you to basically put your toe in the water, as they say. So when you click here, you get from the earnings and calendar, you are reaching this screener, and you got yourself a little more stability, a little more stuff to look at. So if you can see, this is a big week. We got today 80 companies are posting earnings. Tomorrow 161, July 31st almost 300, and August 1st is the big one for the week. 333 companies posting, and this is I think Friday or Thursday, and this is Friday before earning. A lot of things happening this week, as they say. And it all started, it also starts you with this morning. Even though you couldn't trade today, you could have traded on Friday. It goes with all those stocks, McDonald's, and we're going to go over all those details in a second, but just so you know, we can do a little bit of filtering, because if you scroll here, you got yourself insane amount of stock. It doesn't even show, just show next, next, next. Okay, so you're going to do a couple of things. Let's focus, let's say tomorrow. I want to know what's going on tomorrow, and tomorrow after hours, so I can actually trade it. And if you can see, I assume you can change it by a couple of things, market cap and all that. Here you go. The default is by market cap. You see the market cap number one that posts tomorrow is Microsoft, okay? And that's the date, July 30, and after AMC means after market close, not AMC the stock. Now we got a few things in here, a few things that you can pay attention. We got after market close, but also, so that's around 4 o'clock, 4:15. Usually they post around like 15 minutes after, something like that, but that's not enough. And the point of this screener is to show you that Microsoft or any other stock that you can filter has either one or two possibilities for either make or break your trade. So for example, let me show you what I mean. Microsoft right here, they post opportunity number one, they post AMC after market close tomorrow. So that's one opportunity, and then they show all the numbers, earning per share and all that. This is like the raw data that where all the buyers and sellers are trying to make sense. So that's option one. But option two comes here. And this is something that I didn't have, and I'm glad that I now know about it. The conference call, the specific conference call for this earning is July 30, 5:30 p.m. So about an hour and 15 minutes after the earning posted, after the market has some information and learn all the raw numbers, all the dry data. After that, Microsoft, the management does a conference call, and then they answer question, they elaborate a little more about the numbers, And that's opportunity number two to surprise the market. They can say something about AI. I don't know. There's a lot of stuff that's going on. And here it tells you the previous move was 1.8% post earnings, and it tells you the data. It's really pretty awesome. In April 24, it was from 410, 412, 46, 49, and eventually 0.4% or negative 2.5% the following day. Earning report 25 of April after market close, they went up 1.8%, and 3 days later they went down 1%. Okay, but the expected move, this is another something that you can consider. If you are option trader but you're not a gambler, like a lot of people, just so you know, if you are retail, and we all retail, the institution side, how they trade like earnings, how they trade earning, just an FYI, they buy straddle, okay? They buy a straddle, and it tells you here, expected move is derived from the front month option expiration implied straddle value. Implied straddle value, the value represents the expected move in either direction, up or down. So the straddle, and you can put it in Robinhood or Tastyworks, whatever that you trade, if you want, of course, no one's saying that you need to, is basically 5%. So the market is expecting a 5% move either up or down. The market is expecting a 5% move up or down. Keep in mind the previous move was less than 2%. So basically it tells you, hey, Microsoft right now, let's click on it just so we know what's the exact price. If you click on the white page in here, it gives you all the details. Price 430, 427, okay, and gives you all the data here. And basically, and if you click here, it opens 50 other tabs of Microsoft and trade ideas and so many things to consider. But basically, if we take Microsoft for the example, we got ourselves, as I said, two opportunities. One opportunity for the stock to move is right when the earning posted, and the second opportunity is about an hour later when they post the conference at 5:30 p.m., which is a great information to realize. And the expected move, so what the institution people are buying, institution traders, they just buy a straddle, but they buy the straddle with an expected move. They're paying like the premium is about 5% to the upside or down. Let's say that the how do I explain it without showing you? So let's say, you know what? Let me show you. Let me show you. So I open TastyTrade, okay, and yeah, no affiliate link, no nothing. You can have an affiliate link for Market Chameleon, link below. But the 5% move means for the monthly. I don't think they're doing the weekly, I could be wrong. But for the monthly, you click here on August 16, and you see here the implied volatility, 36%, the move, plus minus 25 bucks, 24.82. Let's call it 25 bucks, which is actually 10% from here. But they expect a 5% move. So 5% move is 428, about 20 bucks, $21. Okay, so 42 is 10%, and basically $21 is 5%. So 25 is a little extra. It's like 5.5. So you can either go roll by 5% or go by exact number of expected move of 25 bucks, which is instead of 21, it's 25, which is I think like, I don't know, 5.5, 6%. So let's say what they do, if you click here, okay, and you click straddle, you click long straddle, it will basically take the 430 and it will basically the price that you will pay is 2,700 right here, 27 bucks times 100, 2,700, because you're betting that Microsoft will either go up over $27, which is more than the expected move in here. It's a lot of volatility, but there's also one more day, so you can maybe buy this straddle, I don't know, 15 minutes before the close tomorrow. Maybe the price will go below, I don't know, 25, something like that. Or 27 points below for the put. So basically what you're doing, you are gambling, you buy a straddle, and you assume that Microsoft will go either higher 27 points to the upside or 27 points to the downside. If it doesn't, you lose on the straddle. If it stays the same, you lose everything. You lose your whole option. But if it does move, let's say 30 points to either 460, okay, 30 points above, you made $300 or 10% return on your money. Or if it goes to 400 and down 30 points, you still made 30 bucks times 100, 300, something to consider. So that's basically the straddle. You buy both call and put on the same at the money, and you expect the move to be higher than what you pay the premium on both sides. The worst thing that can happen to you on a straddle is if the stock doesn't move, but the expected move is 5%. So something to consider. So that's one way to look at Market Chameleon to find this, and you can filter. You got yourself a lot of stuff that you can filter. I want to show you something. Let's say you don't know when the option will be traded. There's a projected one, okay? So projected means there's no official from like the investor relation website on the website of the company that says when the earning is due, but Market Chameleon estimate July 30 is when they post earnings. Okay, so it doesn't mean confirm. You can click on the other announce, which is like the official thing, which is Microsoft, Procter & Gamble, Mark, and AMD, Pfizer. So many are posting, Starbucks, that's a big day. PayPal, big day basically tomorrow and the next day. And everything happened, just so you know, on August 1st. We got Apple, we got Amazon, we got Intel, we got Booking.com. That's a company that I love. We also get, I assume there's Coinbase somewhere. If you keep scrolling, there's just here. Coinbase at the bottom, and there's 14 more pages. Now, if you wanna, basically, if you are a gambler, I'm not saying do that, but you can do a lot of filters, okay? You can filter by stock price and by average option value. I like to do, for example, over 10,000, and then I know that, let's say for tomorrow, I know that instead of like 50 pages, now we got one page. See? So these are all the stocks that are trading. You see, if we remove the filter, let me show you quickly again. This is all the companies that are posting, 7 pages of companies posting. It's too much, but you want to trade, you want to buy, you want to sell options, all that stuff. You just change average option volume to over 10,000. You're down to one page, and now you got companies that you know: Microsoft, Procter & Gamble, Mark, AMD, Pfizer, Starbucks, PayPal, Pinterest, First Solar, Match, Caesar, SoFi, and JetBlue. Okay, that's interesting. Very, very interesting. And you can do the same thing. We got Procter & Gamble, expected move. This is interesting. This is a previous move, 21%. I think I want to check Starbucks real quick because Starbucks crashed like a month ago from like 85 to 70 or 88 to 70, something like that. And it tells you after market close, Starbucks is posting, but the conference call, look at this, is at 5 p.m. So this is interesting, okay? Conference call is at 5 p.m., like an hour later or 45 minutes. Previous move, there you go, negative 15%, and the expected move is 7.3% to the up or downside. So we'll see what the Starbucks has to do. If they go down to like 62 or something, I'll probably be a long-term holder with some leaps, but we'll see. It remains to be seen. I'm putting some alerts on Microsoft and all that. Another thing that you can do, and sure, you can put by before market open, after market close, today or next day. So that's another thing. You either, if you want to trade today, you can trade today for after market close or for before market open. So all the before market open, for example, it will even be shorter. And so let's say now, if you see the video at like 6 p.m. or something, you can't really do that, but we'll see. So something to consider after market close, but I just like to look anything today, basically that announced or everything above 10K. Yeah, that's something to consider. Let's change it back to tomorrow. Yeah, the Microsoft ones. Another one to think about, a lot of people like to trade stocks that are not like penny and all that. So I like to do anywhere you can do above. So I'm doing above 25, and that even narrow and filter your list even more. So you got Microsoft, Procter and Gamble, like the big, no, the big. You don't need to trade all of them. That's the conclusion. Don't need to trade all of them. Look at this. Pinterest moved 21%. Want to see what they have to offer, so they post tomorrow. They always do big numbers. Not always, but I remember they're doing big numbers. So they're posting after market close, Pinterest at 4:30 p.m. and that's when the conference call. So you see the conference call is right away. They post after market close, let's say 4:15, and 15 minutes later the earning call starts. So something to consider. And the market is expecting 12.7% move over 50,000 option volume average, 25 billion market cap. A lot of stuff, and if you want to go even deeper, you can click on today's opportunities. I'm not gonna do that, but when you do filter by that, this software has so much to offer. It's unbelievable. We're gonna wrap this up in a second, but if you click today's opportunities, you got all those, but you got so many stuff. And if you wanna just go by expected win rate, you just change this one, okay? I'm gonna click on this twice and see what we got. It's loading, give it a minute. Okay. Da, 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 da. There's some interesting stuff in here. Average win rate percentage, 100%. Average return, 1855. Oh, let's see what the first one says. PayPal market cap is here. It tells you the trade call credit spread one day before and close one day after, and tells you what the trade itself. So open trade on July 29, which is today, and close the trade on July 31st for the expiration of August 2nd. I'm just gonna click and see what it has to offer. As I said, there's just so much stuff in this software. You can get lost in it and just go deep and explore and have fun. So it tells you to sell the 63 call and buy the 65 call. Interesting. So and you get paid 38 bucks compared to 27 bucks, which is a good thing. 81% historical win rate, and as long as PayPal stay basically below 63, they are now at 59, 58.8. As long as PayPal stays below 63, you collect the whole premium. Distance to max gain is under 63%. So PayPal needs to go another 7% plus just for you to break it, to still have a max gain. This is actually a good trade. I might take it right now. Upside cushion 7.7%. Okay, current spot 58.83. Yield if the stock is flat, if the 23%. Amount at risk $160. Okay, so you're risking 160 to collect 40 bucks, basically. That's that's the trade. You collect 40, you risk 160, and as long as PayPal doesn't go blow off the water, as they say, and go above 63 or 65, which is your max loss, good. And you also got technical bearish crossover when the stock has been in an uptrend and short-term moving average made a bearish crossover, beginning of a trend reversal. So this is red, plate volatility elevated. Okay, so that's something to consider. Tons of other trade ideas in here, but basically it tells you if you open the trade on PayPal today and you close the trade one day post earnings, so you buy on the 29th, you close on the 31st, there's a 100% win rate, which is insane, but the average return is 18. Theoretical value is 30 bucks, and you collect 40 bucks almost. This is interesting. This is interesting. I might take it right now. I got like 5 minutes to close the closing bell, so we'll see. But something to consider, and just scroll around, play with this. A lot of opportunities. If this was valuable, Market Chameleon 7 days, link in the description. I'll see you next time.